Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, October the 20th, 2023. I apologize for the late video. Everything I did got recorded incorrectly, and the file transfer or re-recording or whatever you want to call it, because I have to make it from Zoom to an MP4, got corrupted somehow. Maybe had to do with a update running in the background. So I have to redo it. Apologize for the delay. Please don't worry about it. No need to send out emails asking for updates. Unless I've stated there will be no update, you will get the update. But sometimes, unfortunately, life gets in between. Just like yesterday, I was supposed to have a call with a member of mine, and a unfortunate event happened that I locked myself out of the house. Shit happens. It's just the way it is. So hold your horses. If everybody would email me, I would get hundreds of emails. I appreciate your enthusiasm, but all things are still on track. Don't worry. This is a cautious bull. Why is it cautious? Because we are seeing good signs in the cryptos, in Bitcoin, but Ethereum is still lagging. So remember, for Bitcoin, we have our 4 phases, and we remain bullish on Bitcoin as long as last year's lows hold. End of story, pretty much. And we're looking for a high into at least 100,000, potentially into the 280,000s. So to be determined, but I guess somewhere around 150 to 200,000 seems very reasonable by the end of 2025. 2 more years. If you can withstand 2 years to increase factor of 10, I think you'll be looking very pretty. So also here, we're looking for this 103 to 200,000 target zone. We have 3 different lines of evidence telling us that we should look higher. And so far, things are looking pretty good. All right, Elliott Wave Count, all that stuff on the side, yada, yada, yada. You know all this stuff. If you don't, please read. This is all meant to help you. So let's start with Bitcoin. This is the wave count we were tracking for the 1, 2, ABC, 3, 4, and 5 of this leading diagonal for wave 1 of 3. Okay, so we talked here for 5 of 1. This is the downtrend line that connects to all-time high, and so far so good. Remember, we're now above the 200-day moving average, and also above the 50-day moving average, and soon the 50 and 20-day will also be above the 200-day moving average. So then we have a bullishly stacked setup. Price is above the 20-day, which is above the 50-day, which is above the 200-day, which is above the Ichimoku cloud. All right, that's the order we want to see for a full-blown bull market, just like we saw here. Okay, price is above the 20-day, 50-day, 200-day, and above the Ichimoku cloud. Wonderful. Okay, that's what we want to see. Good things happening. Of course, eventually, once we see a rally, you'll get the pullback, that type of stuff. But you see the same here. It happens quite frequently, because then you are in a chances of good things happening scenario. And now we are in a chances of good things happening scenario. So that's why we prefer to higher. And so far, this wave count is working out pretty well with this C wave. Looks like subdividing as well. Should see a pullback and then a wave 5. The alternative is, and I simply have updated the 3, 4, and 5 labels, that we are slightly different 1, 2 setup. As you can see here, green 1, green 2 are a little bit different than here. Okay, 1, 2, ABC. And here we say ABC for 1, ABC for 2, ABC for 3, etc. But we get about to the same area for this wave 5 of 1. I wanted to point out that we said if we go above 27,500, we go to about 28,100. Above 28,100, we can target 30,250. Boom, shakalaka, boom, we've reached it. So I think regardless, this is a little bit potato, right? Potato, wave 1, wave 2, all right? Wave 1, wave 2, it's all the same, potato, that this is simply a different way of interpreting the price action. I want to keep it on the map. I'll track it for myself on the side, because this allows me to always improve, because a different interpretation of the price action can help me further down the line, where I would say, oh, but remember, this is how it was back then, and that was the correct interpretation. Because in the end, we are simply interpreting the price action to the best of our knowledge. I hope my knowledge is pretty good. And as you can see, we have done an ABC for 1, ABC for 2, ABC for 3, 4, and 5, which is kind of the hallmark of a leading diagonal overlapping the higher in ABCs. We get the final pullback or the last pullback before things will rocket higher in third of the third wave. Okay. Also here we've reached the target zone for 3. Should pull back. 5 reaches about 31,500 plus or minus 500. Similarly here, about 31,500 to 30,500. A little bit lower, but it's about the same, right? It's not going to be stiff resistance. We're going to drop probably to the 200-day moving average. That would rocket through resistance. So I like it. So I have 2 bullish options. That's good. Now, what are our bearish alternatives? The bearish alternatives are shown here, that we still are in this green B wave, and all hell will break loose and we're going to bottom soon. So why? Because we're still in this target zone for this B wave. Okay, the C wave is a little bit ugly, but it's fine. So then we have, say, this S wave, C, something like that. So this is still possible. And again, we now need to pretty much break below the 200-day moving average, and then below this one, so we can raise our support levels. Okay, we can still allow for this wave count. The first warning is below 28,000, pretty much. Second warning below 26,500. Final warning below the September 11 high. It's still possible. In my own opinion, it starts to become less likely. Okay, so I start to really seriously consider this wave count here versus this wave count. It's fine, but this one is now our alternative. Least likely, in my own opinion, is this 1-2 setup. It's possible. We need to break below the September low to prove otherwise. Above 31,750, all bets are off. Meaning that this wave count is, of course, taken off the table. Okay. And last but not least, our bigger picture once again. So that is pretty much where we are at. I have 2 bullish scenarios, a little bit about how you interpret the price action since the September low into October. It's fine. It gets us to about the same levels of around 31,500. Alternatively, this was still a B wave, but we now need to break below these key price levels. Of course, the same here for the bullish wave counts, right? We need to hold, of course, the same levels. Now, Ethereum still has a lot more work to do because it's not even above its 50-day average. Okay, so Ethereum is definitely in a much tougher place than Bitcoin, and hopefully it can play catch up. That would be great, but it needs to break above its 50-day moving average. That's why I'm saying we're cautiously bullish. Okay, bullish on Bitcoin for sure, cautiously bullish on Ethereum at best. Now, GBTC. This was our alternative wave count. Last time I showed it because we've gone too far, too high, too long for this to be a B wave. So I'm going to delete this one. I'm not going to deal with it anymore. Instead, I think we have this nice 1-2, 1-2 setup. We're now in wave 3. We should see a pullback for 4 and then a 5 to complete 1, which of course matches quite nicely with what we're seeing for Bitcoin. So now I think the stars are starting to align. Sorry, that one is off the table. Never ever show it again. 3, 4, 3, 4, 5. Okay, 1, 2, 3, 4, 5, 3, 4. Love it. Looks really good. As we said, we need to break above each subsequent level, above 22, and we're going to the 40s. Well, eventually we'll get there, but now we're tracking this impulse. This looks, in my humble opinion, really nice this way. And of course, we know that now the breakout levels are support levels. If we go below 22, we go to about 21. We go below 21, we go to 20. That's not what we want to see. We really want to see the 22, 21 region hold for GBTC, and then see a rally to wave 5 high of about 26 plus or minus 50 cents. And then we get a wave 2, and then of course we get the third of the third wave. Okay, but this looks awfully strong. Okay, similar to what we saw here in June. Okay, and if I zoom out a little bit, add another month here to the price data, you can see this looks quite similar to what we saw here in January. Okay, also here we had a 3, 4, 5, and similarly here we had a 3, 4, 5 setup, and we kind of starting to see the same. So I like this a lot. All right, 1, 2, 3, 4, 5, A1, B2, and this is one of at least C, but most likely third wave. ETHE. All right, it starts to look bullish as well because we're riding the upper Bollinger Band. And as you can see, ETHE is really where it was in July. Now compare that with actual Ethereum, which is where it was not in July. So it's topsy-turvy. That's why we're cautiously bullish, because this is weird. I know the grayscales have to do some catch-up because they are really undervalued, as long as we assume that the 1 to 1,000 relationship holds. So Ethereum is now at about 1,600. So ETHE should be at 16. So I really have some catching up to do. And that will, of course, make for a whole different wave count. But it hasn't broken out above the July high like it did for GBTC. Okay, GBTC is already much further along. So this one, I can't yet fully commit to this wave count. And we might, of course, still have this weirder ABC type of setup. And then we simply have to move the B to here. And then this is all pretty much, this is then, of course, A. And this is then, of course, right? This is, of course, B. And then this is going to be C. So something like this, really, really complex type of double flat type of correction. But it starts to become less likely. The more we're going to move higher, again, above 1275, I think it's completely off the table. So this is then, of course, our alternative. And that's why I showed this preferred wave count. But it's a little ugly, I must admit. And ETHE has always been more overlapping than GBTC for whatever reason. Maybe simply because it's a altcoin and less traded than GBTC. If you look at the GBTC volume, 6.2 million, and here we have 2.8 million. But should still follow Elliott Wave. It's enough volume to make a mass psychology analysis, which is what Elliott Wave is. So this looks good. And last but not least, the altcoins also start moving. So they have not been forgotten. And the one I want to bring back to our attention is Solana. Solana starts to move in the right direction. Our trading system has been trading it very successfully over the last several weeks with lots of winning trades to the long side. And as you can see, it is knocking on the door of 27. When it gets above 45, that we target 45. Above 45, we get 85, etc. So this one is starting to move in the right direction and is back on my radar. I haven't forgotten about any of these altcoins, but as long as they do nothing, I don't think it was worth our while or our time. But now it is serious time to start to consider Solana once again. Of the altcoins I'm tracking, I think it's one of the best ones. Don't know about Ripple, but all those things, of course, we need to assess one by one. But for now, Solana is back on my radar. Okay. So I think we have some very nice setups, long-term and short-term. Things are moving in the right direction, especially for Bitcoin. We've reached the third wave target zones. A pullback for a wave 4 should not be unexpected. Okay, now we simply have to monitor how shallow that will be. I don't think the pullback we had here this week after Sunday's spike, I believe it was, so Saturday, Friday, Thursday, Wednesday, Tuesday, or Monday spike, whatever it was, that day, this pullback was all of wave 4 because the other ones took a lot longer. That would be a little bit out of symmetry from a timing perspective. I think it's better as an ABC. So we should see a longer, more protracted wave 4 and then a wave 5. If we see really these 5 waves up, oh boy, it's really time to get uber bullish once we get the wave 2 pullback to, of course, this type of level around 27, 28,000. I would definitely advise to buy that hand over fist, though I cannot give you any trading advice because I'm not a registered investment advisor. All right, so it looks all good. Alternative is the B wave, but we need to break, of course, below at the minimum 28,000, followed by 26,500, then below the September 11 low. And that could even target all the way to 8 to 10,000, but I don't think so because our analysis suggests on 3 different levels that we are going to the 100 to 200,000 based on Elliott Wave, remember, and based on, of course, these cycle gain projections, based, of course, on the log growth curve, the timing sequence as well. So I think we're lining up quite nicely and things start to look more and more bullish. That's all I have for today. Take care, trade safe. Catch you all next week.